What's up everybody? Nate here. So it looks like the long-awaited final chapter is here. And no, I'm not talking about Kenobi, I'm of course talking about inflation. Unfortunately, we have seen inflation do everything in our economy over the last 2 years. The Federal Reserve and the United States President, Joe Biden, have kind of gone back and forth about how inflation has affected our economy. At first, they said inflation was no big deal. The main cause of it was our supply chain issues. Once all of those go away, then inflation is going to magically go back down. All it is transitory. But by the end of 2021, their tune pretty much changed. They started to agree that inflation was getting way worse than even they had anticipated, and they were going to have to start instituting some pretty serious monetary policies in order to lower it. And now we're all the way in May of 2022, and they are finally doing some things to lower inflation. Now, by the end of May 2022, President Joe Biden and Chairman of the Federal Reserve, Jerome Powell, actually had a meeting at the White House regarding inflation. They laid out their three-step plan to lower inflation in the United States, and today we're going to talk about everything. We're going to go over the three-step plan, how it works, and if it's actually going to lower inflation in 2022 and beyond. But before we get into all of that, do me a quick favor and hit, smash, or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free, and they help to show me that you like this video and that you want to see even more just like it. Alright, so step one of the three-step plan is for President Joe Biden and his administration and Congress and basically the American people to allow the Federal Reserve to do basically whatever they want when it comes to inflation. President Joe Biden reasserted his stance that Jerome Powell and the rest of the Federal Reserve needs to have some breathing room in order to do what they have to in order to lower inflation. He said that he doesn't want to have that much interference with the Federal Reserve. He wants them to be able to have the freedom and the ability to do what they have to in terms of stimulus and their interest rates to lower inflation in the United States. Part of the reason that he's saying this is because Congress and the American people have been really back and forth on their feelings for the Federal Reserve. Obviously, inflation in the United States is at an over 40-year high, and while it did slow down a little bit in April, it's still very much higher than what the Fed and regular Americans would like at this point. So businesses and Americans and agencies and Congress have all been trying to do what they can to lower inflation, but President Joe Biden is saying that you have to let the Federal Reserve work here. They have a plan and it's going to take a while to implement, but once it's fully implemented, then you're going to see inflation come back down. So that is step one. Now, step two is all about actually lowering the prices of goods and services. So the Federal Reserve can only do so much on their end to kind of stifle or spike demand in our economy, but Congress and the United States President can pretty much fill in the gaps everywhere else. President Joe Biden is making it his focus to lower the prices of everything in our economy, and that includes energy like gas. During this meeting with Chairman Jerome Powell, Biden said that he mostly blames energy prices on Ukraine and Russia, and that is partly true. Obviously, it's been a lot harder for the United States to get their oil, but we don't get a ton of oil from Ukraine and Russia. However, the prices for everything in our economy are not always set by what we do here at home. A lot of the time, they are set by all of the producers and all of the exporters from around the world, and a lot of those have to do with Russia and Ukraine and many others in China. So they didn't really specify in the meeting how they're going to lower the prices here at home, but I suspect it has a lot to do with the job market. They want to reach something called maximum employment. The United States does, and so does the Federal Reserve. They want everybody in our economy working to kind of subvert a lot of those supply chain issues. If you have everybody working to produce more goods and services, well, then your GDP grows and people have more things to buy. Now, President Joe Biden is confident that once the job market completely recovers, so we have this great resignation problem eventually disappearing and people are getting back to work and productivity improves, well, then people are going to make more money, and also we're going to have a lot more things for people to buy. That will hopefully bring down the supply chain problems from all of this inflation, and then with the Federal Reserve lowering demand even more by raising their interest rates and pulling a lot of their stimulus, well, that is the other half, and hopefully inflation can come down from there. Now that's their plan, not mine. So like I said, the second part of this plan has everything to do with lowering prices, getting Americans back to work on a regular basis, and improving supply chain issues all throughout the United States and around the world. And that is going to take a lot of infrastructure building. A lot of his infrastructure bill that we saw passed in 2021 addresses a lot of these concerns, but it's a multi-year process and it's not going to happen overnight. And then the final part of the plan is to lower the federal spending deficit. When you have a deficit, that means your government or business or whatever it is spending a lot more money than they have, so they're borrowing a lot of money. Biden believes that our federal deficit will drop by around $1.7 trillion by the end of 2022. And he plans on doing this by lowering United States spending and increasing taxes across the board. Now, not everybody is going to see a tax increase, but a lot of the things that haven't been taxed in the past are now going to be taxed in the future. The Biden administration is working on that to bring in a lot more revenue so that the United States government doesn't have to print as much. They want to be able to use all of the dollars that are currently there. They don't want to have to keep reprinting money because that is how inflation goes up in the first place. I mean, technically by definition, all inflation means is that a government is raising its spending. They are printing a lot more money to give out to everybody. But every time you print more money, the buying power of those dollars suddenly goes down. This is because you have a lot more money, people have more money in general, and they're spending more. So if they have to spend more, businesses have to produce more, which is a cost for them. So then they trickle those costs down to you. It's also worth mentioning that in this meeting with Powell, he basically said that our economic growth in the future is going to look a whole lot different. Part of the way that the United States economy grows is by jobs. We have a lot of people who are employed, and those people end up getting a whole lot of money that they can go out and spend. But with our unemployment rate at historically low levels right now, well, you're not going to see a whole lot of job growth in the future. So that is President Joe Biden's three-step plan, and now here's my opinion of it. Kind of addressing the first part where he gives the Federal Reserve kind of its own independence to do the things that it needs to, well, I totally understand that. President Joe Biden, his administration, and the Federal Reserve all need to be on the same page. I mean, if they're all kind of wanting different things and fighting and arguing with one another, well, then that's going to look bad on the American public, which is going to mean that the American public doesn't want to go out and spend their money. They're going to be a lot more scared if our leaders are not on the same page about our monetary policies. So I understand where he's coming from. You want to have that unity, but at the same time, the Federal Reserve has not really done a super great job with inflation up to this point. The Federal Reserve is getting aggressive on inflation now, and they definitely need to. In March of 2022, they raised their interest rates by 0.25%. That essentially eliminated some demand from our economy because that made it a whole lot harder for banks to get their money, and if banks are having a hard time getting their money, well, then they're going to make it much harder for you to go out and get a loan. That includes an auto loan or a mortgage. With all of that demand going down, then all of our markets start to come down too. The crypto market came down, and also the stock market came down because a lot of these businesses and investors rely on debt in order to grow. And at the beginning of May, we saw them raise their interest rates again, this time by 0.5%. So the federal funds rate right now sits at around 0.75 to 1%, which is much higher than the 0% we saw just a year ago. And they're getting even more aggressive. They are completely focused on lowering inflation. They do not care what happens to our economy. The only reason that they're able to raise their interest rates is because they feel like our employment level is really high, so people have money, and that our demand is much more elevated than it needs to be. So people have way too much money, and bringing that down isn't really going to hurt anything. So raising interest rates in theory shouldn't really hurt our economy all that much, but it it can if they get way too aggressive. There are many investors and experts, and even the Federal Reserve themselves have said that this interest rate spiking could eventually lead to a recession because you suck way too much demand out of your economy all at once way too quickly. And like I said, they are going to get even more aggressive in the future, which is going to affect everything in our economy. But this is all way too late. The Federal Reserve, in my opinion, should have been raising their interest rates 6 to 8 months ago. When they said that they were going to start doing that, that's when they actually should have done it. Now they are way behind the curve on inflation, and it's gotten way too high, so they have to get super aggressive in order to compensate. So the Federal Reserve being this far behind shows me that they're not really handling inflation the right way. Now, to address his second part, the supply chain issues, well, there is not really much the United States government and the Federal Reserve can do about our supply chains. Like I said, most of that has to do with other parts of the world, like China and Russia and Ukraine. These places hold a lot of the resources that companies in the United States need in order to produce their goods, but we don't have a say on what those countries and businesses abroad do with their resources. That creates a problem here at home because now you have the Federal Reserve raising interest rates and you have the Biden administration doing all of these things, but that's not really going to help. They can improve the infrastructure of the United States once those supplies get here and once those products get here, but they can't exactly fix things overseas. That leads me to believe that we are still going to have these supply chain issues regardless of how much the Biden administration talks about them, which means inflation is going to continue to go up or it's going to stay where it's at. We don't control the pandemic and we don't control the war between Russia and Ukraine, so as long as those two things are going on, you're going to see inflation related to the main industries of those countries. And then finally, lowering the federal deficit. Now, this is something that the Biden administration has talked about pretty much since they've been in office, and it's been really easy to lower the deficit since the Federal Reserve is lowering its stimulus and the United States government is lowering its stimulus. Basically, the United States government in 2022 is spending a whole lot less than it did in 2020 and in 2021. So yeah, it's really easy to lower the deficit. We don't have a raging pandemic, so you don't need as much money flowing throughout your economy. So he is going to take all of the benefits from that pretty much from the start, but then he talks a lot about raising taxes. Now, the Biden administration has gotten really creative on how they want to raise taxes, not only in 2022, but beyond. President Joe Biden still has his Build Back Better bill, which is a multi-trillion-dollar bill floating around Congress, and in 2021, he passed his almost $2 trillion infrastructure bill. Now, the United States government has to find ways to pay for all of those bills without raising inflation, which is basically impossible. I mean, you can start taxing the American public, but that really isn't going to help your situation either. So the Biden administration has talked a lot about raising capital gains taxes, almost from 20% to 25% for long-term gains. They've also talked about raising the top income tax bracket to almost 43% and taking away a lot of tax advantages like the estate tax, the death tax, and the stock buyback programs that a lot of companies implement every single day. Instituting taxes on this will bring in hundreds of billions of dollars a year if they're passed. The president has also created some agencies to look at taxing cryptocurrencies more. So the president is doing all of these things to try to figure out how to bring more revenue into the United States government without raising inflation even more. He has said that inflation in 2022 is his #1 priority, and lowering it is going to be very difficult. I believe that inflation will come down in the United States, but not without seeing a small recession. Our economy exploded over the last 2 years after falling due to the pandemic, and I believe we're going to see another short recession as the United States kind of gets everything back to normal. Our economy is not functioning how it should right now. Everything in every market and every single consumer market is going up to record highs. We're talking prices, we're talking assets like stocks, bonds, and real estate. All of these things cannot continue to set record highs. They have to come back down while incomes start to come back up. The only way to do that is for consumers to basically spend nothing. And President Biden talked about this in his meeting with Powell too. Americans are starting to save a whole lot more right now, and they're bringing down their debt. However, the only reason that Americans are taking on a whole lot less debt in 2022 is because interest rates are way too high. So it's basically impossible. You're going to run into a situation where Americans are going to have a very difficult time spending money. Then you have demand coming way back down, so people aren't spending money, prices will go down. If the pandemic goes away, then that will help prices go down too, and everything will eventually level out. It won't feel like a basic recession though. I don't think we're going to see a whole lot of unemployment. I don't think we're going to see crashes in every single market, but things do need to come back down to a realistic level. So right now, President Joe Biden and Chairman of the Federal Reserve, Jerome Powell, are basically just saying, hang in there, kids. But now I want to hear from you on this issue. What do you think about this administration and the Federal Reserve's three-step plan to lower inflation in 2022? Do you think this is something that's going to work and eventually, because of this plan, inflation will be a whole lot lower? Or do you think that inflation is not going to go down anytime soon and this new plan is not going to help at all? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.